So, BP's latest earnings report just dropped. And honestly, if you're just looking at the headlines, you've got to be scratching your head. One report says they crushed it, another says they lost billions. So, what's the real story? Okay, let's dig in and unravel this thing.
All right, so this is the central puzzle we're talking about. On the one hand, you have the good news. BP beat what the analysts were expecting, both on earnings per share and on revenue. In fact, they brought in over $5 billion more than predicted. Pretty good, right? But then you look at the other hand. The official accounting number shows a staggering $3.4 billion loss for the quarter. How on earth can both of these things be true at the same time? Well, that's exactly what we're going to unpack.
But, before we get completely lost in all these numbers, it's really important to ground this story. During the earnings call, the CFO, Kate Thompson, didn't start with profits. She started with a somber acknowledgement of a tragedy inside the company. It's a really powerful reminder that behind all these massive global operations, there's a real human element.
Okay, so to solve this puzzle, we've got to look at the two very different stories happening inside BP right now. First up, let's talk about the part of the business that's just crushing it. I'm talking about their traditional oil and gas engine.
And man, what an engine it is. For the year, BP hit record reliability in its plants, kicked off 7 new major projects, and, this is a big one, they replaced 90% of the oil and gas reserves they used up. That is a huge leap from around 50% in past years. This strength drove $7.5 billion in underlying profit. Now that's the profit from the day-to-day business, right? Before you factor in any of the big, weird accounting stuff we'll get to in a minute. The core business is absolutely firing on all cylinders.
And on top of all that, their exploration team basically hit the jackpot. They made this discovery, and it's estimated at roughly $8 billion.
Yeah, and that's not $8 billion. We're talking 8 billion barrels of liquids. This thing, they're calling it Bumerangue, is their single biggest find in 25 years. I mean, that is a massive, massive win for the old-school energy side of the company and a huge deal for its future.
Okay, so if oil and gas is just booming, that brings us right back to our puzzle, doesn't it? Where in the world did that multi-billion-dollar loss come from? Let's flip the script and look at the other side of the story. BP's push into the energy transition.
The smoking gun for that headline loss? It's right here, a negative $4 billion hit. That's the value of the after-tax impairments the company took just in the fourth quarter.
So what in the world is an impairment? Sounds complicated, but it's not too bad. Basically, it's a non-cash accounting charge. Think of it like this. Say a company buys a factory for $1 billion, but a few years later, they realize it's only worth, $600 million. They have to impair it on their books, taking a $400 million loss. The key thing is, no actual cash leaves the building at that moment. It's just the company officially admitting, hey, that investment didn't work out like we thought.
And this is where it all clicks into place. The earnings report is super clear that this $4 billion write-down was almost all tied to BP's newer green energy ventures, specifically in biogas and renewables. So the company is basically saying two things here. One, they're tapping the brakes on growth in this area, and two, the green assets they already owned just aren't worth what they paid for them. Ouch.
So you've got this super profitable oil and gas machine on one side, and then this struggling, super expensive transition portfolio on the other. And that brings us to the big why behind the company's new game plan. It's all about strengthening that financial core.
The best way to think about BP's new strategy is like a strategic pit stop in a race. For the last few years, they've been going full throttle, trying to pay back shareholders and invest in the future, all at once. Now they're pulling into the pits. They're slowing things down, like share buybacks, so they can do some repairs and really strengthen their financial foundation, their balance sheet.
So what does this pit stop actually look like? It's a pretty straightforward 3-step plan. Step 1, hit pause on the share buyback program to hold on to cash. Step 2, sell off some major assets to bring more cash in the door. And step 3, use all that cash to beef up the balance sheet, which is really just code for paying down debt.
And we're not talking about small moves here. They've already completed or announced over $11 billion in sales. And the crown jewel of this sale? They're selling a 65% stake in the Castrol brand. The motor oil people, which alone should bring in about $6 billion.
All right, so after this big strategic pit stop, what does the road ahead actually look like for BP heading into 2026? Well, if there's one word to describe it, it's got to be discipline.
And you can see this new discipline all over their 2026 guidance. Look, capital spending, they're keeping a tight lid on it.
They're planning to bring in another $9 to $10 billion from selling stuff, mostly in the back half of the year. And check this out, the production forecast, broadly flat to slightly lower. See, they are not chasing growth right now. It's all about cash flow and killing that debt. You can see it right there in the net debt line. They expect it to tick up a bit at first, but then drop like a rock once all that cash from the asset sales starts rolling in.
So when you put it all together, this tale of two results, it really leaves us with a huge provocative question. Is BP making a really shrewd, pragmatic pivot here? Are they doubling down on the incredibly profitable oil and gas business that's working so well for them? Or is this a retreat? Are they backing away from the tough, expensive, but maybe necessary work of the energy transition? How the company answers that question, well, that's going to define its entire future.